Okay guys, so in this video I just wanted to recap on a few things that we've already learned, but also try and introduce a few other parts of the chart that we haven't looked at yet, so you can begin to picture a little bit better on what's going on in this chart. So just to recap, on the left hand side up here at the top we've got the currency that we're looking at. In this case it is the British pound against the Japanese yen. Currently I'm on a 15-minute chart, which basically means that each candle here represents 15 minutes worth of price action. So as we can see right now, the market is open and you can see this price here, it is moving. But if we look at the 15 minutes prior to this, so this is the 15 minutes prior to the current price action that's going on right now. So if we look at 15 minutes prior, what actually happened? Okay, so firstly, what I wanted to touch up on is that the red candles mean that the price has fallen within that time frame. So now we're looking at the 15 minutes. So within that 15 minutes, the price overall fell. Okay, the green candle means that the price rose or increased within that time period. Okay, so within this 15 minutes here, the price is obviously risen. It's green. It's just visually easier to understand where price has risen or where price has fallen. So green means the price has risen. Red means the price has fallen. Okay, so when you hover over a candle, you'll see up here. So I'm on this candle right now, but you'll see here what the open was, what the highest was, what the low point was, and what the close was. Okay, so now when we're looking at the green candle, let me zoom in a little bit more. We'll have a look at this one. So when we look at the green candle, the price has opened up here. Okay, so that's where the price opened up. The previous candle fell from up here all the way down to this point, and the next candle therefore opened up at this point here. Okay, so this is the open. So when we look at the top left here and it says 148.312, that's where the candle opened up, okay, for that 15 minutes. The price rose all the way up. So when we look at the H there, it says 149.406 right there. Yep, 149.406. That was the highest point within that 15-minute time frame that the price reached. Okay, then within the time frame it did fall again, and it closed at 148.917, which is just there. 148.917. That's where it closed at. The lowest point it got to was here, which is 148.270, sorry. Okay, so that in every single candlestick, that's exactly what it means. Okay, so the open on a green candle is always at the bottom and the close is at the top here. The high is obviously the highest point it got to. The L stands for the lowest point it got to, which was here, right? Now if you have a look at a red candle, just to compare, the red candle always opens at the top, okay, and closes at the bottom. So the O here is 148.995. That is the open of that candle. It did increase a little bit to 149.046, but price then fell. Okay, it fell all the way down to this little wick, they are called. Okay, they're called spikes or wicks within candles. It fell all the way down to here, which is 148.906, and then it just closed slightly above at 148.791. But the general rule of thumb here is that the price overall fell, so this candle will then turn red. Yeah, if the price rose, I mean, look at this candle here. It did fall below the previous candle. If it continued to fall, it would have ended up as a red candle. But the price eventually rose above where it opened, and so it turned green. Okay, now we're looking at this one. We'll see how this works out in a little bit. As you can see, there's still 7 minutes remaining within this candle to close. Okay, now as you can see, that candle just turned green from red, yeah, because it just past, so it's turning red now. It just means that the price has either fallen below or above where it opened up. So it's opened up here because it's a red candle. As you can see, it fell and closed here. So the body of the candle is where the close is, which is there. And the red candle, it will be there, okay? And because it's falling a little bit below that now, it's turned red. If it turns, if it goes a little bit above where it opened, that candlestick will then turn green. And then the completion of that candlestick comes when this time frame, when this time period is up. In this case, it is 6 minutes remaining, there or thereabouts, of the 15 minutes that we are looking at right now. Because the market is open and live at the minute, this dotted line here is the current price. So that's the basics on these candlesticks, so you now understand what they mean. The candlestick formations and the patterns will be explained later on in the course. So let me just zoom out a little bit now. Have a look at these lines. What do these lines mean? This also will be covered in much more depth later on in the course. But just to explain briefly, very briefly, this is just the price action. This is called the moving average, okay? So this is just the price action smoothed out over time, okay? So now we've got three different lines on there, as you can see. There's a blue one, there's a red one, and there's a green one, which just basically represents the moving average over different time periods. Okay, so as the Forex jargon has actually been explained already, let me move to the daily chart so we can explain this a little bit. Let me just smooth this out a little bit more. Okay, let's have a look at some of this Forex jargon in practice. So when you can see the MAs, or the moving averages, on an uptrend, so here, for example, they are all moving up. That means it is a bull trend, okay? So the price is moving up. Let me just highlight that for you guys. So that just basically means the price is moving up in an upwards direction, okay? So there clearly you can see the price has started here and it's been moving upwards, okay? Now in the opposite way, we can see that the price is in a bear trend, which basically means the price is moving from up to down. Okay, now that is a bear trend. Now we have other things on this chart that I don't want to go into too much because there's a whole section, the technical analysis section, that's dedicated towards this. But these lines here are the support and resistance lines. Now they'll be different based on the time frames that you're looking at. So again, I don't want to go into that too much, but just to explain briefly, the support is the bottom line. Okay, this is where basically the price doesn't like falling below. Okay, so this level here supports the price level falling below it. Okay, the top level here is called the resistance, which basically means the price resists going above this level. Okay, now eventually these levels will be broken. Like I said, I don't want to go into this too much. But as you can see here, so if this is the resistance, you can see how many times the price has gone up to this level, tried to break above it, hasn't been able to, and has fallen back down to this support level. Again, it's fallen a little bit below it, but then it's bounced back up from the support level, again here, and it's gone back up to this resistance level. Okay, so like I mentioned, we will cover this in greater depth in the technical analysis section of the course, but I just wanted to touch upon it so you understand what the support and resistance levels are. We will teach you exactly how to analyze these support and resistance levels and how to draw these lines on so it can help you within your trading as well. Also, you've got things such as stop losses and take profits. You might have heard these terms with other traders or when researching trading, or it might be the first time you're actually hearing these phrases. Okay, so a stop loss on a trade is placed when you think the market has gone in the opposite direction that you predicted or analyzed it for it to go. Okay, so for example, if we got up to here, it's closing up towards the resistance level. Now this would not be the only reason why you would take on this trade. Okay, but there's also rejection there. But we'll go on to that in later on in the course. But say, for example, you chose to place a short trade somewhere around here, okay? Now, your risk is your stop loss, okay? Now, you would place the stop loss, say, somewhere above here because you're predicting the market to go down. Now, what if the market goes in the opposite direction? Okay, you want to be out of that trade before it gets you in too much of a loss, okay? So if for example, the price started rising above this level around here somewhere, you would think, okay, fine, I've got this trade wrong, get me out of this market before I suffer a bigger loss, because that's very important in trading. Just as getting big wins, minimizing your losses or restricting your losses is very important in trading as well. Okay, so the stop loss, luckily we live in a digital era where this can be done automatically on the apps on your phone. Okay, you can set the stop loss to say, okay, fine, if it reaches this level here, 151.298, for example, if it reaches that level, I want to be out of that trade. Now, your profit level might be somewhere around here. And if it hits that level where it would have done on this candle here, for example, then you would be out of that trade. You would take your profit and happy days, okay? But if it goes in the opposite direction, you have the stop losses. Again, this will, placing a trade using the indicators, trend lines, Fibonacci, all these tools here on the side will be covered in depth in the technical analysis section. But hopefully now you understand a little bit more about what everything means on this chart. So here, just to recap very quickly, okay, you've got the currencies quoted up at the top here. You've got the time frames at the top. You've got the opens, highs, lows, and the closes of each candle here. So now we're on the daily candle. Earlier we were looking at the 15-minute. So now each candle represents 1 day. Okay. So this was the 29th of June. If we move across, that must have been the weekend. 2nd of July, 3rd of July, 4th of July. Okay, and so on. The price is written here on the side, and the dates are at the bottom. Okay, very simple. We'll see you in the next video.